Alright, I just wanted to make a quick video um, talking about some ways I compare stocks, and some of these I'm actually quite bullish on, and I wanted to discuss some of the ways I'm comparing these potential investments. Um, Something I've been paying attention to lately is I feel like there's going to be a trend away from tech stocks and back into value stocks. Um, Specifically, I've been comparing oil and gas companies. I'm very bullish on the oil and gas sector in this next coming years, as the U.S. economy enters a period of stagflation, um, where pretty much the only thing we produce more of is money. Um, Even domestic U.S. oil production is down, um, and and on top of that, I've been noticing that Russian stocks, particularly, are very undervalued. So what I'm looking at here is recently I've been looking at price over book value, and my number one determinant of if a stock is a good deal or not. And theoretically, this is how many pennies on the dollar you're buying the assets for, minus liabilities. In layman's terms, really, it's more complicated than that. But so I have the profit margin here. I feel like that's a valuable source of info, but really you just want to make sure that the company's not bleeding money. I'm not putting a whole lot of merit on that, a whole lot of merit on this. But and then beyond that, you have the PE ratio, obviously. So now, typically, historically speaking, like anything below any PE ratio below like 15 is considered a good deal. Um, and so if you look at Gazprom and Lukoil, you have a really cheap stock price relative to book value, and the PE ratio is just super low. So, not only that, but Gazprom is paying a 6.6 dividend, which is quite substantial, and it's actually, I was calculating the dividends per earnings per share to try and create some metric of how affordable this dividend is. And this actually ends up to be quite similar to the dividend payout ratio, but not exactly. I kind of just whimsically created it out of curiosity, but I feel like it would actually be quite an effective, useful measurement or ratio in the future. But we'll see, going forward. But really, it's showing what percentage of their earnings, like their profits, are they paying in dividends. So, I mean, 12% of your profits going to dividends, that's acceptable. 24, little high, still acceptable. 6%, you can see that this is really conservative. Now, Lukoil just cut their dividend heavily. This is something to note, and normally that would be a pretty bearish sign. But something I noticed is that if you look at the past, like if you go to Yahoo Finance and go to look at Lukoil's page, and you go to statistics, you'll see the dividend payout ratio is like 200% something. And see, that was kind of alarming to me, as it shows that they were kind of being greedy with their dividend. They're paying too much money with their dividend. And the fact that they cut it a few months ago is actually a really good sign, because they're kind of looking for the long term. They're not just looking to appease their investors for the short term, but, they want to help their investors for the long term. So, um, and I've actually been quite impressed with the competency of of the management of Lukoil recently. You should actually check out some of the things their CEO's done recently with the pandemic and everything. It's pretty cool. He's actually been quite charitable. Um, but outside of that, I wanted to compare the Russian deals compared to American or the UK. Um, you can see here that even though I'm still bullish on this whole sector of oil and gas, I wanted to compare it with various countries. And you can see the dividend yields like kind of the same. Um, but the price to book value is a little bit high. The stock, the market price is higher than the book price. Now, that's not the end of the world, as we're definitely in a world where interest rates are as low as they are. We can expect share prices to be higher. But it's something worth noting that the Russian companies, I believe that they're cheaper simply due to a psychology. I believe that it's just off people's radar to invest in Russia, and it's not due to any logical reason. I have the personal opinion that they've learned their lessons from the fall of communism, whereas we are almost falling into more and more socialism and potentially not communism, but our freedoms are dwindling. Um, Whereas Russia, it's hard to say, but their leadership, I sense a bit more competence and patriotism in their leadership. I'm not quite so sure I could say the same about America. Now, also in the past, America's just been the place to invest, so that's why I believe that these companies are just, or the UK, or these companies are just more on people's radar, and so they're not as good of a deal, but they're still a buy. I wanted to compare, just some like John Deere's, something random from some other sector, and two high-flying, you know, Tesla and Amazon. I felt like it was worth comparing these two, and you can see what a bad PE ratio is. Price to book value. So you're basically, you buy a Tesla share at $600. Um, you're basically paying 26 times more than you should be. So while they might not necessarily go bankrupt, I'm a huge bear on this stock. Um, I'm kind of a bear on Amazon, to be fair. That might be shocking to hear, but if you've read Amazon up the last like 5-10 years, you might want to take some money off the table. But I thought this was worth making a video about. Is this currently how I go about some of my stock analysis. Um, Also worth noting is the beta. It's a measure of volatility. So you can see that in the investment world, volatility is risk. I don't necessarily agree with that fully, but using their definition, you can kind of use it as a measure of risk. Um, you can see Tesla's very volatile. Amazon, half as volatile, but still volatile. ExxonMobil's been very volatile because of gas and oil price fluctuations in the last year. But you can see that Gazprom is one of the least volatile stocks that I can find. Don't expect to get rich overnight owning it, but don't expect to get poor overnight. I'm very bullish on this stock. The fact that half the Russian government owns it, to me, is a good thing, because the Russian government will stay out of their way and will support any pipelines they want to grow or whatever infrastructure they might need, whatever rights or licenses they may need to get things done, um, the Russian government will be more than happy to oblige and is also incentivized to oblige. Um, so, I mean, Gazprom employs tens of thousands or hundreds of thousands of people and pays a lot of taxes to Russia's government and profits to Russia's government. So the government's going to stay out of their way and is incentivized for them to make money. It's not exactly something we were trained to like in America, with the government involvement typically being bad, and if the government owns it, that means like that's kind of a red flag. Like, but not necessarily in this case because of how the Soviet Union, or what used to be the Soviet Union, had to sell off their assets to private ownership in the 90s. It's kind of slowly evolved into the system it is now, and it's kind of complicated, but I digress. So, um, quickly we can take a look at. So this is Sunday night / Monday morning when I'm recording this. We can see that I believe that the U.S. Treasury yield. Let's see. No, that's the wrong one. Yeah, it's over 1.6 now, so there's going to be pressure on the markets. As this spikes up, it's going to put pressure on the markets. You can see that futures are pissed. Um, Gold is pissed. Silver's still up a little bit. Um, so we'll see what happens this week. It's going to be interesting. Um, I expect there to be blood this week, but I kind of hope I'm wrong.